And good afternoon. Welcome to Trading Tech Talk. My name is Daniel Sinek, and I will be your host today. And I am very excited to have you all on board. We do have an exciting lineup of topics. For example, we are going to unveil our brand new Super Trend Bullseye indicator for TradingView. We are also going to unveil another brand new indicator, which is called Trend Radar, which we have available actually for multiple platforms. And there have been some updates this week to our trading portfolio, which Rainer will cover. So a lot of exciting topics. But before we get started, just a bit of housekeeping. As you know, trading futures, forex, stocks, and other asset classes contains substantial risk and is not suited for every investor. You may lose all of your initial investment or more. When you trade, only trade risk capital. Should you lose your risk capital, it should not impact your financial security or lifestyle. When it comes to hypothetical performance, such as backtest results, keep in mind that these are not necessarily indicative of future performance. So with us today, we have Rainer Michaelis. He will be talking towards the end of the session when he is going to update us what has happened to our trading portfolio. We have Homo on board. She will be manning the chat. And of course, we have Nicola on board as well, who will be giving us a demonstration of our brand new Trend Radar indicator. So what is new at tradingindicators.com? We have finally, it's been in the making for a couple of weeks, but we have finally released Super Trend Bullseye for TradingView. It is, I believe, the first auto-optimizing super trend indicator. And I'd like to use this chance to give you a small demonstration of how this indicator works on the TradingView platform. So this is a TradingView chart of IBM on the daily time frame. And what you see right now is the classic super trend interpretation. And if you're not familiar with super trend, what you can see is that we have these white arrows pointing down, which are sell signals, and these blue arrows pointing up, which are buy signals. And you can also see that these signals are always alternating. A sell signal is followed by a buy signal, which is followed by a sell signal, and so forth. And the way this works is actually quite interesting. So whenever a sell trade closes above its trading stop, it reverses to a buy trade. And we stay long until we close below our trading stop, which happened here. And then we reverse again. And this continues on and on. And in fact, classic super trend has two main parameters, which is the multiplier and the ATR period. And observe this, if I change these parameters, the signals on the chart will update immediately, as you can see here. Now, the question is, how do we know which settings to use for the multiplier and the ATR period? Well, this used to be up for guesswork up until now, because our Super Trend Bullseye indicator has a built-in statistics panel, which you can see here, which will give you a wealth of information. It will show you how many trades were taken, how long was the average duration of a trade, and what was the profit factor. And if you're familiar with the profit factor, you may know that a profit factor above 1 indicates a potentially profitable trading system, and a profit factor below 1, a potentially unprofitable trading system. And in general, the higher the profit factor, the better it is. Now, if I change these parameters, as you can see here, you can see that all these statistics update right away. This makes it very easy for you to find settings which are giving you the best odds when using Super Trend Bullseye. But we have also built in one more function into Super Trend Bullseye, which is an auto optimization feature, which basically means Super Trend Bullseye will find the best settings for you. In order to enable this feature, simply go down in the parameters to optimize parameters and change this value to yes. As soon as you do this, Super Trend Bullseye will automatically find the best settings for multiplier and ATR period. You can see now here that under configuration, a value of 2 and a value of 10 is listed. Basically, this means that the optimal settings for this symbol IBM on the daily time frame is a multiplier of 2 and an ATR period of 10. And now there's one more kicker. Whenever we change the symbol or time frame, the optimal settings will be updated automatically. So for example, if I switch to the 50-minute time frame, the optimal settings would have been a multiplier of 4 and an ATR period of 15, which would give us a profit factor of 4.56, for example. Or I switch down to the 1-minute time frame. Again, our settings update immediately, in this case to 2 and 35. And let's say I want to change symbol altogether. Let's go to Tesla. Again, the settings update immediately, and you can see the optimal settings here, a multiplier of 4 and an ATR period of 5, along with all the statistics which go along with these settings. So we're very happy about this indicator. And just one more thing, we have also integrated an alert function for you. All you need to do is to click on the alerts tab up here. You pick under condition super trend bullseye, and then you can pick which alerts are you interested in. For example, a buy signal or a sell signal. And then you can define how I would like to be notified whenever such a signal occurs. Okay, so this is super trend bullseye for TradingView. But something else has happened this week. We have also released our brand new Trend Radar indicator. And this indicator is available for most of the platforms that we support, including TradingView, MotiveWave, NinjaTrader, MT4, MT5, and Thinkorswim. Okay, so this indicator exists for multiple platforms and it's been designed for you to feel the market pulse. And how this works and how you can take advantage of our brand new Trend Radar indicator will now be discussed by Nicolas.
Okay, so some common questions we often want to answer when reviewing a chart are: what kind of trend are we currently in and how strong is it? How does the short-term action affect the long-term trend? And how are we trending in the long term as opposed to the short term, or vice versa? And there are a lot of common ways of answering this question, and not a few of them will involve calculating some sort of moving averages and then comparing the moving averages as well as current price position in relation to them to tell how we're doing in the short term and long term. So Trend Radar is a new indicator with heat map-like visuals, as you can see over here, that try to give you a kind of bird's eye view of the current trend and make this process a lot easier to answer those questions. It's set to help you gauge both short and long-term trend at a glance and makes it simple to identify pullbacks and trend moves across different periods. So what Trend Radar does is it first calculates and tracks the values of 5 exponential moving averages from very short term or very fast to very long term or very slow period. These EMAs have customizable look back periods. And on every bar, to get that heat map like visual, the indicator plots a column of 5 squares. And each square represents the current price's position relative to one of these 5 exponential moving averages. If the current price is above that EMA on that bar, say it's the very short-term exponential moving average, if price is above that one, then the square for that period will be represented as green. And if it's below that EMA for the current bar, it'll be drawn red. So here we have Trend Radar's visual, and we can see that on every bar, we have these columns of 5 rows of squares. And these rows are arranged from top to bottom to represent the very short term, the short term, medium term, long term, and very long term EMA values. So for example, if we look here at this point in the heat map where we have these 2 red squares in the top row, what this is telling us is that in the very short term, so for the very fast EMA, current price is below that trend, that EMA. But for the longer term period EMAs, all the way down to the very long term, we're actually above the EMA. So what we're seeing here is we're getting a small pullback in what is otherwise a bullish trend. And on the chart, in order from longest to shortest, we actually see the 5 EMAs that Trend Radar is calculating behind the scenes. So by default, down here, we have the 200 EMA, then the 50 EMA, the 21, 13, and 5 EMA, which are represented by these rows in the heat map: 5, 13, 21, 50, 200. So what the heat map's telling us here in a way that's visually easy to catch on to, it's a lot easier than looking at some cluttered lines on the chart, is that the current price has dipped below the 5 EMA. If we look at the price bars and the 5 EMA line here, we see that's true. Price is below the fast, but it's above all of the others. And likewise, over here in this dark red area, we had a pretty strong pullback where we almost broke through every part of our bullish trend, even down through the longest term EMA. But the 200 EMA here kind of held the line. So we saw this deep pullback, but the long-term bullish trend persisted. So here are some example charts just depicting the kind of scenarios or patterns that you can often see with Trend Radar. So in this case, we had a very strong uptrend on the Tesla 2-hour, where we had total alignment across all periods represented by these dots. We were well above the 5 EMAs on all periods, except for these short little points right here. So here we had a pullback within our uptrend, where in the very short term, we kind of had some consolidation before the uptrend continued. So if you see this kind of action where you're just getting a pullback on the top row and everything else persists, that's really not a strong sign of a reversal. And likewise here, we had another weak pullback. And here, the opposite scenario where we have a strong downtrend. It's very easy to visualize that we're not getting any upwards action here. We see total red on the heat map, and only a couple times do we have a short flicker upwards where we break above the fast EMA's downtrend. So what's great about this is really you're encoding the information of 5 EMAs and price's relationship to them in a way that your brain can just calculate and kind of absorb instantly. You don't have to stare at a bunch of lines. And here we have some kind of more deep or more pronounced pullbacks within an uptrend that you're going to see more in the market as opposed to those much stronger trends we just saw previously. So we like to say that this is a common pattern for healthy pullbacks in a strong uptrend or strong downtrend, where we make it down to the medium term in terms of red cells here. So we have red squares deepening or diving down all the way to the medium term EMA before we bounce and see those indicators return to bullish. Or in the next case, we bounce down to the medium term, price bounces up, but we see our green squares dip down to the medium term here, the middle line, before finally price continues with the overarching downtrend. So those were pullbacks. And here we see what is a common way a reversal might happen, where we see a sputter of the opposite direction kind of start to creep into the heat map. And then we see a gradual fall as price breaks through all of these supporting EMAs. And we see the shift to the other color. And this is just the inverse scenario where we have a downtrend gradually reverse into an uptrend. And finally, what we'll see a lot of is sideways or indecisive action. And that kind of tends to look like this with Trend Radar, where there's a lot of noise here. You have a bearish signal down on the long trend. And then we have kind of intermittent sputterings of bullish action, bearish action, bullish, a bullish alignment, bearish alignment, etc. And there's no real clear trend. Okay, so now I'm going to hop over to TradingView. Okay, so I'm just putting up Trend Radar here on the NASDAQ futures on the daily, just to show how the indicator looks and how it's pretty easy to get a grasp of what's happening with the market just by looking at it. So here I have it with the default settings, and we can see that for a very long while on the daily, as we zoom back, we've been in a very pronounced uptrend. And even relative to the action that we see here recently in the last, since January, we really haven't had this much bearish action or this much bearish alignment where we see we're red on all time frames, all periods since pre-corona. So even the corona dip only really lasted. We only saw a bearish alignment across all of the periods for maybe 1/6 or 1/7 of the duration of what we're seeing now. This type of dip, I just think it's a great example of how it encodes the information nicely. So this might not be so obvious just looking at the chart, but this has actually been a very extended period of bearish action, compared to anything we've seen even in the past 4 or 5 years. So I find it's a very easy way to absorb a lot of information on the short and long-term trends. So here we see we had a little pumping up here into bullish action on the short, medium term, but it was quickly reversed. And last little example here, I put it on a 15-minute chart for, I think this is Houston Energy. And I just wanted to demonstrate how the EMAs work. So here on the 15-minute, we kind of had pronounced bearish action where we kept dropping back into total kind of bearish downtrend here with red on all time frames in Trend Radar until we had this spike up here on the 27th of May, where finally all time frames broke to the long side, to a bullish sentiment, and the bullish alignment kind of lasted longer than it has for a long time. And although we had this big sell-off here and some intermittent pullbacks in the shorter term periods, we see that the long-term bullish trend has still kept up, and we've seen price continue to go up. And when I enable the EMAs representing the different rows of Trend Radar, we can kind of see how that occurs. We're fighting with the shorter term EMAs, but the long term, we've stayed above it in this uptrend.
We had some questions coming in. Does Trend Radar work on all markets? The answer is yes, of course. It's based on price action, and every market that has price action, which is basically every market, this indicator can be used for. So whether it's commodities, indices, stocks, ETFs, futures, currencies, cryptos, yes, all of these can benefit from this indicator. And perhaps one more comment, the green dot at the bottom is an additional help for you, which basically tells you if the 5 EMAs that Nicola was talking about, if they are stacked. And what that means is they are ordered. For a bullish stacking of these EMAs, the slowest EMA is at the bottom. On top of it is the second slowest, then the medium EMA, then the second to fastest, and then the fastest. They're all ordered this way. Whenever you see such a dot, it means these NA are stacked bullish, or vice versa. When you see a red dot, it means they are stacked bearish. If you are interested in Trend Radar, we have it available on our online store at www.tradingindicators.com/radar. And for most platforms, including NinjaTrader, ModifWave, and TradingView, we do offer our 7-day money-back guarantee. And the same holds true for our Super Trend Bullseye indicator, which is now also available for TradingView. If you want to take advantage of it, simply go to tradingindicators.com and search for Super Trend Bullseye. I would like to hand over the word to Rainer. Rainer will be discussing what is happening right now in the market and what has happened since last week with our swing trading portfolio. And he will also give you an outlook of what is on his radar next.
I'll give you a short market update because this morning, actually, only about 12 hours ago, the markets were up and it looked like a super great day. And then at 7 o'clock, 8 o'clock, some news came out and it started to wiggle. And then during the day, well, the market turned down and we had about a 600-point loss today. So we got to be still very careful in this market because it's still very, very volatile. Overall, it's a mixed market. The US was this time not as good. Yesterday, the US was very good. Today was not so good. And overall, with Asia and all that, pretty much mixed. Nevertheless, biotech has currently a very strong support. And that is probably true because the FDA announced that they now recommend to vaccinate kids under 5. So a lot of those biotech companies get a big boost. I'm not sure if this is going to be sustainable or not, but they're currently all having a strong boost. Oil and gas is down, which is really surprising, very surprising, but it's because of a export terminal problem. They cannot get the ships and the gas out of the US ports. So this is really the reason it's down. So a very strange thing, but I'm convinced that oil and gas will stay high and will probably go up a little more. And that's also why we have some of those assets on the watch list from that market, because I think we're not at the end of the rope yet here. And what we're looking for is really the key levels. It's on one hand, if you go look at the spiders, it's a 412, 410. I show you that one, which we broke today. We went down almost to 400 today. We'll go there in a second. And tomorrow is going to be a very important day because we have the consumer price index. And that always tells us about the inflation, how the inflation is doing. And this can really have a strong impact. A few months ago, when we still had our 0% interest and stuff like that, this was really not a biggie. But right now, this is actually a very, very important thing, because right now we have a very high inflation and they just don't think that inflation is over. So this is really something to watch out for. So let me show you here SPX. As you can see, we are now back to levels in March 21. So it took us here from March to about December 22 to get up here, and it took us not even half the time to go down. That's how you can see how fast sometimes these bear markets are. And whenever you work in a bear market, you have to be quite quick. And that's also one reason why we are very careful with our trades, because we're not in a very short time frame and you have to be very quick. So you see here, and also I showed you last time how small the candles are here and how even they are pretty much here, which is actually pretty solid, and how large they are, which is a reflection of how volatile the market is. See today again what kind of huge candle this is. The spider, as you can see, we right now close to 400 here. I still think that we go down to the 3600 SPX or the 360. That would be here. That would be another, if you look at those candles, give me another 2 bad days and we're pretty much down here. So it absolutely is in reach. Nevertheless, we still have our portfolio. We had in our portfolio CEIX. That was a potential long entry, which is actually still sort of interesting, but I'll took it off for now because I'm not sure if it's going to go. And we have Halliburton. This is a company that is always in high demand when there is restructuring, industry, oil, energy stuff, if there has to be rebuilding. So this is always a strong thing. I show you this one here. We have them here. You see, filled. I put filled in here on June 6th. It was filled on 6/6. Halliburton with 47 shares. In between, we were up quite a bit. Now we're actually a little bit down, but I still think that Halliburton is going to go up. It was on the 6th when we went in here. Okay. So right now you see we were doing yesterday pretty well. Today we went down a little bit. I'm not too worried. We still have enough wiggle room here, and I'm still very much convinced it will go up. We had CAIX, which I took out. Here you see why. You see that we started to get into a bearish divergence here with the cloud. First, we had the volatility crusher giving us a nice signal. And then we have the bearish divergence cloud. So I took it off because right now I said, give it some time. And don't rush anything. We'll have to see what works. Let me show you another one. I had last week on my plate also Amazon, because they had the split 1 to 20, and that was here, the split you see here, and people are saying they expect Amazon to go roughly to about 140, which would be roughly around this area. So this is definitely going to stay on the watch list. I had BKR, also a company that was quite interesting. I had a signal coming in here, but then today it gave me a big downturn. I had it actually on Monday, Tuesday. I put it on the watch list in order to get triggered as soon as it would break at that time I had the pivot here. I moved that because I was trying something. I said, as soon as it goes through the pivot, it should trigger me. I saw the signal here, said, great, this is exactly how we want it. And then boom, boom, came down. So I'll keep it on the back burner.
Thank you so much, Rainer, for this great overview of the market and what's on your radar next. A little outlook of what to expect next week. Our next Trading Tech Talk will take place again on Thursday at 6 p.m. Eastern. And next week's spotlight topic will be on the Portfolio Architect, which is actually one of our standalone trading tools you can install on your Windows machine, and it will allow you to do an in-depth analysis of your trading strategy. And how this works, we're going to demo to you next week. And of course, Rainer will jump on again with an overview of the market and what is new with his trading portfolio. Okay, so this leaves me, if there are no more questions, with a quick reminder. If you want to get in touch with us to send us feedback, or if you have questions, you can go to tradingindicators.com and there's a contact form which you can use, or simply email Homa at hj@tradingindicators.com. She's always happy to hear of any kind of feedback. Okay, guys, so if there are no more questions, thank you so much for tuning in today. I will see you all next week. Bye-bye.